Welcome. I'm State Senator Michelle McManus, representing the 35th State Senate District. Welcome to the program that I put together called In Touch with Northern Michigan. And today's guest is Dave Adams. Dave is the CEO of the Michigan Credit Union League, and he's here to discuss protecting your financial future. And welcome, Dave. Thank you for coming today to talk about such an important topic. And I thought for the viewers it might be helpful if you just start out and tell us a little bit about yourself and how you got involved in the credit union system and the organization.
I'd be glad to. Thank you. I've been working with credit unions and various credit union trade associations for upwards of 24 years in 3 different states. I've been here in Michigan for the past 10 years. And I am CEO of the Michigan Credit Union League, which is the trade association for Michigan's 375 credit unions that serve about 40% of the population, 4.4 million Michiganians.
Tell us a little bit about the Michigan Credit Union League. What do they do? I mean, first of all, maybe back up. As I mentioned to you, I am a credit union user, and I use a particular credit union in the Traverse City area, but there's credit unions all across my district, the 11 counties I represent. You probably know many of them.
Yes.
But I assume that those credit unions participate with the league.
Yes.
And I think it's important for the citizens to understand what the league does.
Sure. Well, you know, in virtually every industry, whether it be doctors, lawyers, in this case credit unions, banks, and so on, there are a large number of associations that look out for the common objectives that different industries or different businesses have, and even different consumer groups like the American Association of Retired People and different societies. So I work for a trade association that serves credit unions. There are 375 credit unions in Michigan that, as I said, they serve 4.4 million Michiganians. Credit unions, there are about 8,000 credit unions nationwide, serving upwards of 90 million consumers in America. And what we do at the trade association is we look out for some of the common interests that credit unions have with the legislature, with the regulators. We put on education sessions and offer all kinds of programs to help credit unions be more successful.
Okay. Now, many of my citizens probably participate in some sort of financial institution, like a banking institution. What are the real differences between a credit union and a traditional banking institution?
Well, that's a great question. You know, bank is both a noun and a verb. And when you look at the noun, well, there are banks, there are thrifts, there are credit unions, there are finance companies, there are insurance companies. But consumers tend to look at the verb of banking as something that they do to manage their finances. So banking is something that is pretty pervasive in our society. Credit unions, banks, thrifts, insurance companies, they're all providers of banking services in the eyes of consumers. But the fundamental difference is the structure. Credit unions are not for profit. Their structure does not allow them to distribute earnings to shareholders. And so that not-for-profit structure oftentimes creates more of a service incentive as opposed to a profit motive. And we love the profit motive in our society, our wonderful capitalistic society. It's great to have stock-owned companies that have that profit motive. It does a lot of good for our economy and for our society. But it's also good, especially in a sector like financial services, to have a not-for-profit alternative that in some respects keeps the other players kind of on their toes in terms of pricing. And that's important, especially when the average household doesn't have a lot of assets, needs access to credit, and so on.
So give us some examples of differences. Obviously, the credit union would have to make some money to just operate, wouldn't they?
Sure.
So when you say not-for-profit status, which makes them very unique to a banking institution, how do they operate if they're a not-for-profit organization?
Well, if we were to compare a credit union to a community bank side by side, for all intents and purposes, the services offered and the people they serve and the way they go about it is very similar. I suspect that a lot of credit union members think of their credit union as a bank, because basically what happens, whether it's a bank or a credit union, they're taking in deposit money and they're paying an interest rate, and then they're taking that money and lending it out at a higher interest rate, and they're making money off of that interest spread. They then also provide other services for which they charge a fee at times, and they have to make a certain amount of money on that base, because as credit unions and banks grow, they have to be able to set aside reserves so that the deposits of the institution can be safeguarded. So the way they operate is very similar. But again, the key distinction is that because credit unions are not-for-profit, they don't have to take earnings and distribute it to the shareholders like a for-profit company would do of any kind, bank or otherwise. And because they don't have that necessity or that obligation, they are afforded a tax-exempt status. So their net earnings are not taxed. They don't have to be distributed to stockholders. That builds in a little bit more value oftentimes. And that's why credit unions typically can offer a little bit better, a little bit lower loan rate, a little bit better savings rate, and certainly lower fees than what a typical for-profit provider would do.
Okay. If you could maybe take us back in history and examine kind of the movement of credit unions, because I'm seeing more and more credit unions pop up.
Sure.
And in some instances, in the region that I represent, I'm seeing where there's one credit union that has now 2 or 3 branches in the city. Can you maybe talk a little bit about the historical perspective?
First of all, it isn't that credit unions are forming. We actually haven't chartered a credit union in Michigan in the past 20 years. What you're referring to is credit unions are expanding a bit, they're adding branches, they're changing their names, and they're becoming more community oriented so that more people can join, more people can belong to a credit union. But what we're seeing really is that even though credit unions are relatively small players, if you look at the whole financial services industry in this country, it's a $55 trillion industry that includes depository institutions, insurance companies, mutual funds, finance companies, etc. And credit unions only hold less than 2% of that pie. So as not-for-profit tax-exempt players, they have a fairly small percentage of the huge financial services pie. With that being said, the types of services that they render are critically important for most middle-class and lower-income households, because they provide access to small balance savings accounts that earn interest. Oftentimes they provide loans that would be either not made by a bank or a thrift or another provider, or they're done in a way that provides greater value. And so they play an important role for consumers especially, but in aggregate they're maybe not as big a player as some of the other providers. But yeah, the changes that we're seeing, credit unions grew out of the Depression era in the 30s, at a time when people were having a hard time getting access to credit. And when credit unions were first formed, they were organized around occupational groups.
Okay.
So auto workers and doctors and factory workers and such would form these small credit unions. But since the 30s, 40s, 50s, as we progress to where we are today, credit unions have become very diverse in their fields of membership. And that's important so that more people have access to a credit union.
So in the past, 2 credit unions in northern Michigan that come to mind in the Traverse City region are the Traverse Bay Area Credit Union and then the Catholic Credit Union. So what you're explaining is that even though I might not be a Catholic, I could still belong to the Catholic Credit Union. Is that correct?
Correct.
Okay.
Correct.
Okay, that's kind of interesting.
And the big change is that if you go back a few years in Michigan, just go back to the early 80s, we had 600 credit unions. Now there are 375. And so credit unions have had to consolidate and merge together, in part because technology drives that, some of the underlying sponsor groups went away, or just that credit unions are trying to find ways to branch out to serve more of the population. If credit unions are because credit unions are tax exempt, that's a privilege that is given to them by the federal and state government. And as such, you would think that everyone, every consumer, every tax-paying consumer ought to have access to a credit union.
Okay.
And so the fact that we've seen the state legislature allow credit unions to diversify their fields of membership, that's a good thing because more people have access to a credit union now.
Okay, so that was really the legislature that allowed that. They didn't change their mission just for their own purposes.